What is net operating income, or NOI? As you can see in the visual here, the first thing we want to understand is what kind of cash flow and cash this property will generate. So the first section we want to talk about is what are the gross rents. So there's two different types of leases for an investment property. There's a gross lease, which everything's all included, and there's a triple net lease, which is based off of how many square feet, as well as a triple net, which is the insurance, the taxes, everything on that on the entire building divided by how much square feet you occupy within that building. So it's really important to understand if you have a gross lease or a triple net lease. But in the case you want to put in your gross rents, all of these are based on an annual figure. So again, if you have $100 a month rent, it's $1,200 a year is what you put under gross rents. Reimbursements, triple net. If you are on triple net, you want to put in what the income is for that triple net. Vacancy and credit loss. Banks always want to see how does it perform if there's a vacancy within the property. Generally speaking, a bank will put in about a 5% vacancy credit. So they will actually take out of your income 5% just in case there was any sort of vacancies. And then what you get a gross operating income. Then you have the expenses on the property. Expenses are your management fees. If you use a property management, generally they're around 4%. How about any sort of repairs that have happened on the property? Anything that's major, even the simple stuff. What is the repairs for that property? Janitorial supplies and maintenance. There are things, there's light bulbs you need to buy. There's all those little things. That all goes under that category. Insurance. Insurance is critical when on an investment property. So what is that cost for the year? Taxes, your property taxes. What are the property taxes for the building that you're going to buy? Utilities. You want to add in what your utilities are, your water, sewer, garbage, electricity. However that is set up on your units, you want to add that expenses in there as well. And then there's miscellaneous. There could be legal, there could be CPAs, accountants, there could be other fees that are in there. So you add up all those expenses and you take your gross operating income, subtract all your expenses to get a NOI, or a net operating income. Again, this is the number that banks look at of how can you afford the payment and what is the history of the property that you're purchasing.